Can I first thank you all very, very much indeed for the invitation to come to Seoul. But I'm really, really sorry that it's proved impossible. And I'm sorry also to be doing it by video because it's never quite as good as in person. But I'm still grateful for the opportunity. I've only 20 minutes to talk about owner-occupation, its benefits and risks in different market conditions. There is a PowerPoint which I hope will help you to understand what I'm doing. First of all, there are a number of different forms of owner-occupation, and it depends which country we come from as to which we regard as normal. In Europe and in North America, debt financing is the normal way, so you take a mortgage and you pay the mortgage off during your lifetime. But in many parts of Europe and in other parts of the world, family support and self-build is the norm. Ireland is like that, Spain and Italy, and in these cases we do not have debt finance except within the family. A third group which has become very important over the last 30 years is restitution and transfer. As in the case of Eastern Europe, transition economies, state-owned housing has simply been transferred either to their original owners or to the tenants. And in the UK and in a number of other countries, a lot of right to buy or sales to tenants have taken place, reducing the amount of social renting and increasing owner-occupation. Possibly the most important type of owner-occupation across the world is actually government-sponsored owner-occupation. In many emerging countries that involves a lot of new build, 10 million dwelling programs in Brazil, others in Chile and in Mexico, and in Asia where there's a lot of government support for owner-occupation. So as a result, the highest rates of owner-occupation are not in Western Europe or in North America, but they're in the emerging countries and also in the transition economies. Now turning to the next slide, this shows population by tenure of the European Union, and what it shows is that the transition economies basically own their own homes and have very little debt. But as you move further to the right, you move into the debt financing economies, the Western European economies, where the norm is mortgage rather than owned outright. And what you can also see is how little private renting and particularly social renting there is in some of these countries. Now to turn to the second issue, why do we make such a fuss about owner-occupation? It is the majority tenure of the world, and that's one reason. But we need to look at the benefits and then the risks of owner-occupation, and these have been changing very much over the last few years. If you ask people what they'd like to be, mostly they say we would like to be owner-occupiers. They want control over their own housing. They want the capacity to vary their expenditure over their lifetime in relationship to their incomes. They want lower costs of management and maintenance. They want feelings of security. They want to be free of that landlord-tenant relationship, which can be very, very difficult. And they would like to accumulate some wealth in their property. But there are other means of getting there. And also, for many people, there's a significant amount of risk attached to that. So it's not everybody benefits from it. The lower income you are, the more likely you are to face risks as well as benefits. But before going on to the risks, what about the benefits to governments, which are, I think, in some ways much greater? The idea is, of course, that people can pay for their own housing while they're working, and they may be free of such payments when they're retired. So they will still, of course, have to pay for their energy and for their management and maintenance, but they won't be paying rent. And paying rent in your old age usually runs into real affordability problems. So the long-term costs to governments who have social security can be very large because people have got low pensions and they may have care requirements, etc. If you're an owner-occupier, hopefully you can pay for all those yourself. It's also argued very strongly in the literature that people who own their own homes have a commitment to the value of that property and to maintaining that property for their children. So you get better management and maintenance, you get better neighbourhoods arising out of property ownership. And you may, some of the sociological studies suggest a lot of it, you may get well-being and health benefits, but to some extent, although they seem to be linked to owner occupation, they may be more linked to income, education and wealth. And most generally, Mrs. Thatcher, who a very long while ago now, argued that the benefits of owner occupation were to the economy and to society, and that a property-owning democracy was a much more stable environment than a system based on rental properties and landlords. Now, turning to the risks, which have become a much more important part of the discussion over the last few years, especially since the global financial crisis, I think the first thing to say is that the risks are not just about finance. They aren't the ones which we have been talking about in the wake of the credit crunch. But they are very important, and they're important to the world economy because housing and property make up an enormous part of the financing system of the world. And people who have a debt, have a mortgage, are concerned about variations in house prices and in interest rates, and they fear that they will not be able to pay their mortgage, and if that's the case, then they may lose their home. Now, of course, those who own their own homes also care about house prices because that is their stock of wealth, and it's what they can pass on to their children. The costs of moving and other transactions costs for all owner-occupiers are significant. So mainly people like to become owner-occupiers when they don't expect to move that often, because the transaction costs can be between 5 and 10% in some of the major industrialized economies and maybe considerably higher in some of the emerging economies. But the one risk which the economist talks about a great deal is the fact that you've got a lot of your wealth tied up in a single asset, and that asset is in a particular location, and the drug dealer may move next door, or other things may happen which will make life difficult. So there is a worry that your portfolio, if you're rich enough to have a portfolio, will be unbalanced, and that you will be taking on very specific risks which are a danger to yourself and to your long-term well-being. The other risk is that management and maintenance may just become too expensive, and that has been a big issue in the transition economies, where the types of housing which have been transferred to the tenants often are unsuitable for individual repair and maintenance. And then there are associated costs, energy costs. Again, transition economies, that's very important. Risks to governments are about whether owner-occupation really helps the economy. Labour immobility is one of the things which particularly worries people, that because it's expensive to move, you won't move to another job. And if you haven't got the capacity to go to rented property, that may be a major problem. Tenure distortions between tenures. It's clear that many countries favour owner-occupation over other tenures, and that distorts choices. And one of the things which Professor Kim has already talked about is the intergenerational equity issues, that people of my generation and the generation after me have done very well out of it, out of inflation, out of house prices, and we are basically crowding out young people, partly because we're living longer. So with 4 generations instead of 3, it becomes extremely difficult for young people to get onto the housing ladder. Also for governments, the finance and development industries are significant parts of their economy, and if things go wrong, they tend to have to bail them out rather than simply to leave them to sort their own problems out. And housing market volatility is seen as a big aspect of macro stability problems. So governments want to have control over their money supply, to have control over their macro economy, and property markets, particularly the development side of property markets, cause major problems in this area. And it's particularly true for some of the Asian countries where the currency is tied to another currency, then you haven't got very many policy instruments by which you can control this situation. Now, I know that I'm going very fast, and I hope that it is possible to follow, but what I want to talk about now is basically the global financial crisis and the market conditions before and after that crisis, and what that implies for owner occupation. We've had large-scale property market crises, both residential and commercial, in Europe and in North America in the late 1980s, which took many, many years to unravel and to move into a more general growth economy after the mid-1990s. And then in Asia in the mid-1990s we also had massive property market problems, which again forced the economies into a major crisis for 3, 4, 5 years. What we observe since then is that in countries which are dependent upon debt finance, mortgages, there's been rising debt to GDP ratios in many countries. So if we look at the table which is on the next slide, you can see that in Europe, and residential debt to GDP was about 40% in 2003 and just over 50% in 2013. But in the Netherlands, which we always think of as a solid economy behaving itself, that ratio is 84% in 2003 and 105% in 2013. This left people very open to problems of a credit crunch. Denmark, another sober country, has risen from 65% to 94%, and this is mainly existing owners borrowing against the value of their housing. Sweden, 52 to 82, UK 66 to 81. And even Germany, which is very low owner occupation, had a debt ratio of 54% in 2003, because many people who don't own their own homes still own property which they rent out. In Germany, that dependence upon debt has fallen significantly, quite against the general trend. France, you can see that it nearly doubled over that period. Poland, 4 times, but of course from an incredibly low base. Hungary doubled, and again from a relatively low base. And Russia, which is seen as having a big mortgage crisis, only has a 4% GDP ratio of residential debt. So what has happened over the last the years before the crisis is that debt to GDP ratios rose very rapidly, meant that people were able to borrow more as the financial markets were liberalised. They did borrow more. That borrowing helped to increase prices. So it was linked to increasing problems of affordability and growing debt among existing owner-occupiers, which means that the risks of crisis go on for very much longer. And the residential sector was seen as one of the major drivers of the global financial crisis, both because on the mortgage side of the subprime market and over-indebtedness among mortgagors, but also very significantly in bank portfolios because banks held too much mortgage debt and they knew too little about it. And this meant that it hit countries with relatively little exposure on the demand side, on the owner-occupied side, particularly Germany. But the most important impacts were on countries which emphasised owner-occupation but also had very elastic supply. So Spain, Ireland, Iceland were all building, in relationship to their populations, enormous amounts of housing, which had real impacts when the crisis hit. A particular issue which is true for Hungary, for Poland, for Austria to some extent, some other countries in Europe, but also in some other Asian countries, is foreign exchange denominated mortgages. Because if the world goes a bit odd and your economy goes a bit odd, you go out of line with the country with which you are your mortgage is linked, and you may find yourself having to repay enormous amounts. And that has been a massive problem in some parts of the transition economies in particular. No, so the credit crunch happened. The world says credit crunches take about 18 months to sort out. This one has been going now for nearly 7 years. So after the global financial crisis has been a massive negative impact on the world economy and on countries particularly where owner-occupation has been the majority tenure. There's been an enormously negative impact on construction because people are not expected to be able to pay for it, so the demand is not there, uncertainties about employment, reduced demand, and so there's been a negative impact on economic growth and on employment overall. And while households have run down their debts, incomes also lowered, so the ratios have not changed very much. Credit has not picked up. It has remained restricted, and most countries are going in for systemic changes in regulation, which is excluding a lot of people from owner-occupation, notably, of course, young people. The result is that owner-occupation rates are falling. In Britain, they've fallen from over 70% in England to 64%, which is below the European average, but they've fallen in most other countries of Europe, except for the ones with very low owner-occupation rates, Germany, Switzerland, where they are rising as house prices rise. The problem is, where do you go if you don't go to owner-occupation? We're not building social renting in most countries, and therefore you end up in the private rented sector. The private sector is often very expensive as compared to owner-occupation. But if you can't get into owner-occupation, you're getting poorer quality and higher prices. And as we've already remarked, and Professor Kim has evidenced, there are fundamental intergenerational issues. Now, what we do know is that this fundamental issue of whether young people can get into the market has been a real major problem for a long period of time. The next graph shows the home ownership rates by age in the UK, and it shows very clearly that younger people stopped being able to get into owner-occupation at the time when they traditionally had done so after the '89 crisis, not after the 2008 crisis. And that is true for the youngest households, and it's true for the second youngest households, and it's true for households up to 35, and it is beginning to be true, of course, for all households. So you've got the youngest people falling out after '89, either because they'd felt it was too risky or because it was too expensive. And then you've got the people who we would regard as traditional owner-occupiers, the young people with children who are beginning to settle down, being excluded as affordability gets worse, up to a situation after 2004 when the overall figures in owner-occupation start to decline. So there is evidence across a very large number of countries, not just in Europe, in North America, Australasia, that owner-occupation rates have been declining in debt-financed countries. It's less true, of course, in countries where there's been very significant government sponsorship of owner-occupation, which has been continuing. And the reasons for the falls are about affordability. They are about the fact that existing owner-occupiers, people in age 50, find themselves with money and there's very little to invest in. They invest in property, so they rent it out to their children's friends rather than allow their children to get into the owner-occupied market. And one of the good examples here is Australia, where owner-occupation remains around 70%, but the proportion of younger households getting into owner-occupation has been declining since the 1970s. It's not a financial crisis issue. And there are similar patterns in many other countries. Just very quickly, because I think that I'm running out of time, there is the issue of emerging markets, which in world terms is probably vastly more important than this emphasis on Western Europe, which by definition is where I come from. In many emerging markets, governments have tried to sponsor large-scale development programs, construction programs, to improve the quality of housing overall. In the main, they've done this by owner-occupation. They've done it by owner-occupation because there isn't a social sector in place. There are no organisations, non-profit organisations from which you can build social housing very effectively. And private markets, private rental markets are very unregulated and generally very distorted. So they've used owner occupation because they basically can't collect the rents from rental markets, and they also do have very strong beliefs that owner occupation will have a stabilising effect on the economy. So they put in large-scale building programs with what I would call rent to buy. They ask people to pay something, an interest charge, for 10 years in Brazil, and then thereafter it's their own. They've still, of course, got to pay their energy costs, they've got to pay their service costs, they've got to pay quite a lot of costs which are not entirely under their control, but they do not actually have to pay interest or rent after 10 years if you're in the lower income households. That's the Brazilian system. It's similar to the Chilean system, the Mexican system. What of course is very, very worrying about these types of systems is that in the main people's incomes are not really enough either to pay all these extra costs or to maintain the quality of the stock. So there are real issues about what the longer-term situation is going to be. And as most of you will know, there's also issues about accessibility and the location of these houses, because they're normally put where there is public land which is readily available, and that can often be a long way from the work which people want. But fundamentally, these emerging markets have used government sponsorship and government funding, but they are moving towards wanting to have a debt financing system because they've got to cut their public expenditures. So we're looking to build private markets for these mortgages, and this type of issue has still to be played out in a different world. So finally, in conclusion, I think it's true to say that a large proportion of the world don't know anything other than owner occupation, but it may not feel like the owner occupation which I've been describing of security and choice, but more this is just where I live. Often self-built, possibly in a favela. But most people do want to own at some stage in their lives. They do want that sort of freedom. But more and more we find that fewer people in Europe and North America expect to be able to do so in the medium term. So we're going to end up with people in the rental market for longer periods of time, possibly even into old age, which is something which Europe has not been expecting. The majority of people, however, at least in industrialized countries, own and own safely. With either no mortgage, very large numbers of people with no mortgage, or affordable repayments. And they benefit from ownership in the important ways we've talked about, increasing asset values, but much more importantly, choice and control over their own environment. But there are still very significant risks, especially from housing market and macroeconomic volatility. In Europe, I think we're moving towards a situation where people do expect to rent, at least in the early parts of their lives, or indeed to stay with their family and not form a separate household, and settle into owner occupation only in their 30s or conceivably even their 40s. That is the German model. It's been the German model for many, many years, and it is beginning to be the European model. But it's also the case that home ownership is often still cheaper for these households, and cheaper for government than other options. So people, after the global financial crisis, have been forced into tenures which are not the ideal from a point of view of their own expenditure or of their own security. But whether in the future the turn down in home ownership is going to continue simply because of problems of affordability, the financial crisis, the lack of funding and increased regulation, or whether actually we've got a whole generation, or now 2 generations, who really don't want the responsibility of owner occupation for the sake of it. They would like to have a good landlord and a fairly secure tenancy and a certainty about what their rent's going to be. That's a different model of stable, secure housing, and one which we are finding extremely difficult to replicate. But whether we're looking at choice, that young people would like this, or whether we're looking at constraint, we are really not quite sure. My own view is that we're still mainly looking at constraint. What is clear is that housing markets across the world, especially in Europe, are distinctly in disequilibrium and are often quite dysfunctional as compared to what we had expected to be the case in the 21st century. And the new normal has not yet evolved. Thank you very much indeed, and I hope I haven't overrun.